Good afternoon. It's Jeff Christian, CPM Group. It's 10 minutes after 12 on Tuesday, the 8th of August, here in New York. I want to talk today about markets and our market views, economic update a little bit. And I'm going to end with a little bit of talk about the CPM challenge. And maybe I'll put out another challenge, or I see it as an offer, but I think some people might see it as a challenge. Let's get into it all first. Gold prices are off sharply today. In fact, gold, silver, platinum, palladium are off sharply. Other commodities are off. Oil's off. The stock market's off. Interest rates are even down. So clearly somebody's picking on silver. Oh, no, I'm sorry. They're not picking on silver. You see assets across the board lower today. Gold's off about $10 as I speak, around $1,960. It is August. We are heading toward, we're in the thick of the period of seasonal weakness in prices, and we're also seeing a lot of increased optimism about overall economic activity, both in the United States and on a global basis, all of which is sort of weighing on gold. Our expectation is that the price of gold will remain weak, possibly for the rest of August into September, but then we still expect it to rise at a later time. We don't necessarily see it going below 1900 or 1880 in a worst case scenario. Silver, more weak. It's off. It's below $23. I think it's off about 25 cents as we speak. It may be more than that. Silver's having a tougher time holding on to its strength. There's greater bearishness on the part of a lot of investors. And there's a lot of investors who are simply don't want to be involved in silver at this time. Again, our expectation is the price probably holds above $22. A spike down to $21.75 isn't out of the question in our minds. In fact, it's in our published reports. For those people who actually subscribe to them. And we don't see the price going down as low as it did in the third quarter of 2023. Platinum is testing 900 as we speak. It's just above 900. Our expectation is that the price would probably hold above 900. Some weakness below that is possible, but we do think that there is rising investor interest in platinum. Some investors, institutional investors and others, are looking at platinum. They're saying this is an interesting story. We're sort of backing off of the blind optimism about how rapid energy transition and the rise of electric vehicles replacing ICE vehicles are. We're listening to people like the International Energy Agency and CPM Group who are saying there's no way that we can reach 50% market share of electric vehicles by 2030. The raw materials, the motors, the controllers, none of it's there to do that. So the energy transition is going to be slower. We're going to be using petroleum products for the foreseeable future. We're going to need platinum group metals to clean up the exhaust of those petroleum products and coal, and it's probably going to be leaning toward platinum rather than palladium insofar as possible in terms of the use. So we see a firm base 1880 or $880, $900 in palladium. We do think that the price will rise in the long term. Obviously, a recession at some point next year or the year after could put weakness into the auto sector, which is the major use of platinum, and that could lead to some price weakness. But we do think that in the longer term, the price trend is probably higher. Palladium prices should be right there, but they don't seem to be there. I will tell you that our view of palladium prices, which are heading to test $1,200, we wouldn't be surprised to see the price fall below $1,200, partly because of the substitution away from palladium into platinum and, the growth in electric vehicles. So a combination of factors there. But in platinum, investors look at the auto demand and they see a positive story for platinum because of the substitution. and the lack of mining investments in new mining in the future. Whereas they look at palladium and they see a price that has risen to record price levels over the last several years and probably is heading down lower, partly because of the substitution. London gold inventories. The LBMA reported inventories for gold and silver today through the end of July. Inventories for gold were off marginally, less than 1%. You can see there it's still around 286 million ounces or so of gold that are in inventories. And I do want to make a point about this, but let me get on to silver first. Silver inventories are up a little bit, I believe less than 1%. They're about 860 million ounces right now. I'll make a comment about silver a little bit later toward the end of this. But in the interim, I want to point out something. The London gold and silver inventories are inventories that are in LBMA registered depositories within London. They do not, or they exclude London area vaults that are not in the LBMA registered depository system. And they also exclude vaults that are just outside of the London inclusion zone that the LBMA uses in saying what can be depositories that they will recognize. There are non-LBMA registered depositories in London and in the London area, and they sometimes hold gold and silver. But these reports, which go back to the middle of 2016 when the London banks started reporting their inventory holdings, these are only the metal in LBMA registered depositories. That's the bulk of the metal in the London area, from what we can tell, but something that somebody should know. So that's our market update. Talk a little bit about the economy. The economy continues to be mixed. There are a lot of strong signals, and there are a lot of signs of weaknesses. Unemployment and employment trends are still positive. You've actually seen an uptick in housing construction for new housing in the United States. There are other pockets of weaknesses. Chinese exports fell about 14% last month. It was reported today. That's an extremely important measure of GDP in any country. International trade is a very big indicator of GDP trends on a global basis and on a national basis. And for China, which is still pretty heavily dependent on export for its economic activity, it's a sign of weakness. You can see here on the left, you have the real GDP in index terms. So you can sort of see that real GDP continues to rise. And then on the right-hand side, you see the changes in annual GDP year over year. And you can see that it's pretty much bumping along in the same sort of level that we've seen in the period 2009 through 2019, the post-Great Recession prior to the pandemic and lockdown. So it is a little bit lower than it was in the immediate aftermath of the lockdown. And there are signs of strength and there are signs of weakness. I covered that about 2 weeks ago in greater detail. If you want to go back and find a video from a week or two ago where we talked about gold, silver, the dollar, and the economy. I think I also have a chart of the U.S. Treasury 10-year notes market yield. And it's very interesting because, Fitch has downgraded the U.S. Treasury to AA plus from AAA. Two of the three rating agencies now have downgraded it. One did it a decade ago. Even with the downgrade, interest rates have not risen sharply. So again, it's something of a scare that's going there. Now, speaking of scares, one last chart, the dollar. The dollar is not falling. Actually, the dollar's been relatively strong in the last few days. Today, it's mixed. It's up against the euro and the pound, down against the yen. You can see that the dollar is up sharply from where it was in 2010, 2015. It's up about 10% from where it was in 2021. And you can see that it's actually doing pretty well. Speaking of pessimism, last November in a video, I talked about the CPM challenge. I said, people who go around saying silver's going to be $90 by the end of this month, it's going to be several $100s within a short period after September. Gold's going to be $10,000, $20,000, $30,000. I said, they should put a date on their projections. Gold's going to skyrocket. One guy did. Yesterday, he said that the silver price was going to skyrocket today. Well, it's off. I'm sure that he would say that the powers that be are pounding it down, even though, as I said earlier, asset prices are off across the board today. So it hardly looks like somebody's focusing on silver, although I'm sure that a conspiracy person would say, well, yeah, they're taking the cover of weakness across markets to pound the silver price down. It's all nonsense. But in November, I said the CPM challenge. If you are pontificating about sharply higher gold and silver prices, put a date on when you expect that to happen. And then, if it doesn't happen by that time, do the ethical thing and stop pontificating in public about these views. If you've been wrong for your entire career, whether it's 1 year or 2 years, or 20 years or 40 years, I know people in each category, stop, please. It's not ethical for somebody to be consistently wrong and offering information to people who might actually invest and lose money on it. You can see this as a brief excerpt of the CPM challenge. Now, I'll go one further because I keep hearing about how there's no silver left. And you can see there's 860 million ounces in London. There's a couple 100 million ounces in COMEX registered vaults. There's enormous amounts of silver that have been there for long periods of time in Chinese vaults spread throughout the country. There's enormous amounts of silver in India and in other countries that we know of. And I'll make this offer to anyone who says there's no silver left. I can buy anyone. Well, we only work for accredited investors, so you'd have to put together some sort of organization to do this if you're not an accredited investor. We can buy 100 million ounces of physical silver below $28 an ounce. I'm comfortable and confident that I could do that from what I see in the physical silver market at this time. 100 million ounces and not drive the price over $28. And anybody who says that the world's running out of silver or all the silver is being aggregated in China by some malicious Chinese megalithic company, anybody who really wants silver, I can buy you 100 million ounces below $28. And if you're an accredited investor and you don't want 100 million ounces, if you only want 1 million ounces or $1 million worth of silver, we can buy that for you too at prices below $28. It's not going to be $90 by the end of the month. And if you're going around telling people that, you really should think about what's the right thing for you to do. That's all I've got for this week, for Tuesday. We'll be back on Friday with more information, see where the world is by then. You can go to our website. In the meantime, you can buy our gold, silver, platinum yearbooks. They'll give you a lot of substantive, qualitative information that will help you understand these markets and not lose money based on emotions and fears, but rather make money based on knowledge and understanding. Take care of yourself, take care of those around you, try to do something good for the world. It needs more people trying to do good things for the world than bad things for the world, because there are plenty of people trying to do bad things for the world, and we have to counter them. Take care of yourself.